Here's Damien. He has just been told that the new video game would be out in December. It's May, so he has about 7 months to save up for his game. In other words, he needs to start making provisions to buy the latest video game. This concept of making provisions is used in businesses today, and this lesson will focus on provisions for discounts. Recall that a cash discount is a discount allowed or received at the point of settling debts. Discounts can be allowed or received by a business when a business allows a discount on what they sell. It means that it has reduced the cost of an item so customers can buy it at a lower price than they would have otherwise bought it. In other words, the business will receive a lower revenue than it would have otherwise received. So it is important that provisions are made and accounted for to ensure that the balance on the debtor's account is not overstated. Just as businesses allow discounts, they also receive discounts from their vendors and creditors. Here, the business would pay less than they would have otherwise paid to their creditors. So it is important that provisions are made for discounts received and accounted for to ensure that the balance on the creditor's account is not overstated. So what then is the provision for discounts? Alright, this is the estimation created to cover the expense and income of discounts that may be allowed or received during the year. How would this be done, you might ask? Let's start with discounts allowed. Recall that discounts allowed would reduce the revenue that would have been received. So let's reduce the revenue on the profit or loss account extract on the screen. Since revenue is a credit balance, a reduction in revenue will be a debit entry. Provision for discount allowed can be seen as an expense in the profit or loss account. So where would the second entry be? He will have to open a provision for discounts allowed account and post the second entry on the credit side of the account. So we have the debit and credit entry to provision for discounts allowed. Let us look at the discounts received. Recall that discounts received would reduce the expense of a business. So let's reduce the expenses in the profit or loss account extract on the screen. Since expense is a debit balance, a reduction in expense will be a credit entry. Discounts received are gains to a business and so will be treated as assets. So we will open a provision for discounts received account and post it on the debit side of the account. So we have the debit and credit entry to the provision for the discounts received. You have learned what provisions for discounts received and allowed entail. You also now understand that the double entry for both provisions. Please keep in mind that provisions are just estimates and may not be accurate. In future lessons, we will look at how to account for these changes in provisions. See you there.